All right, let's continue to talk about this because there are some of the things that are sort of connected. Okay, so for example, withhold rate. The default withhold rate is always 30%. That's by default. If you don't provide anything, and you're doing business, you're about to receive money. Okay, if you don't provide anything, that is the 30% withholding rate. That kind of statutory, sort of a mandatory 30% out. Okay, and here's the thing. Treaty reduced rates is possible. For example, if your country and the United States got some treaty, and then maybe, for example, royalty can go down as say 10%. So that's 30% all the way to 10%. But remember, this and another form is connected. So for example, W8. Okay? So there's form called form W8, then BEN. Okay? W8 BEN. So basically, this form, you can say, hey, I am a foreigner, right? And you provide this documentation to prove that you're a foreigner and you are claiming some of the treaty, sort of a discount this back to a certain percent. So basically, if you provide this form, so there's a timeline like this, when you do that, when you first go to a certain platform, this is like 30%, like by default, and then you should provide your tax treaty effects. You want to claim that benefits. You submit this form W8BEN. Okay, you submit that, and then automatically that form, that withhold rate, will going to reduce depending on what kind of treaty that your country and the United States have, and then during that whole year, that withhold agent will using the updated form. So for example, for royalties 10% in some treaty, and then you were going to withhold 10% throughout that year. And then this is like end of the year. Okay, let me just make myself a little bit smaller. Okay, so let me make myself a little bit smaller, right? So at the end of that year, and maybe, for example, the third month of the next year, right? Before that, they were going to issue this form for you. Okay? That is kind of sort of a treat like information return. They're saying, well, according to this previous status, previous form that you provide, I'm going to calculate a certain withheld rates, whether it's a default 30% or whatever agreement that your country and the United States have, and I'm going to reduce that to that certain amount, and then I'm going to withhold that. So this is like a whole year's withholding amount. Okay? So for example, they will give you, say, certain portion. For example, you earn this much United States income, right? But this is like global income. But according to that, maybe I don't know, 30,000 US dollars. That is your US income, okay? And then I'm going to apply that certain rate on this specific US based income. All right. So that's about withholding rate.